That was the week for February the 4th, and it was quite a week, Keith. Enormous turbulence in the public markets when it comes to big tech. Is big tech breaking the world or making the world? It depends which stocks you look at, whether it's Facebook and PayPal, which seem to be destroying the world's economy, or Google and Amazon, which seem to be putting them back together. What's the truth here, Keith?
The truth is that Snap went up 60% today.
6-0.
Today, in one day.
This is Las Vegas. How can it go up 60%?
They announced their results last night. They surprised the market on the
Are they
upside.
the new Facebook? They've always hated Facebook.
Yeah, well, they're not the new Facebook, but they're definitely liked by their shareholders today. I mean, anyone that was holding it and believed in them has been well rewarded, and it's because they became profitable for the first time ever. On the other hand, Facebook missed its numbers and crashed by 28% in a single day. Amazon made its numbers and is up. Amazon's huge already, but it's up 15% today. So these markets are volatile as anything and going in both directions. So what is a person to think, Andrew? What do you think?
Well, I'm not sure if I think anything about these sorts of things. I did talk to my financial advisor this afternoon, and he said that it's par for the course and that you should expect a radical, sharp correction, which is a euphemism for downturn, and a 10% correction isn't a bad thing. I think that we've been waiting for a correction for a while, so I'm not particularly surprised with that.
Yeah.
Some stock, though, has been decimated. As you know, my wife works at PayPal. She's a senior executive there, so hasn't been a great week for her. Certainly hasn't been a great week for Mark Zuckerberg at Facebook, which I kind of celebrate. I mean, I've been waiting for this with Facebook for years. I don't know why it's taken so long for this radical correction on Facebook. I mean, we've been talking for years about how young people don't use Facebook anymore, that it's annoying and unfashionable, and the only people left on Facebook are grandmas. And now it actually seems to be reflected in the data, which I think explains. And the other thing which is interesting about Facebook is there was I don't know if you've got it in your newsletter, there's a really interesting headline in the Journal suggesting that the sharp decline in Facebook is because of Apple's privacy laws. And that makes a lot of sense. We've talked in the past, Keith, about there being lack of trust, hostility between the Apple model and the Facebook model. I'm certainly a big fan of the Apple model over the Facebook model. Apple isn't an ideal company, but it's certainly a better company and a better business model than Apple. So I actually, I think there are reasons to be happy. I think we should be celebrating the crisis of Facebook. It's a horrible company. I don't think anyone likes it outside Facebook, do they?
I think you might be right. Look, this is Apple and Facebook stock over 5 years. Apple in the yellow.
Astonishing. And the other thing, I have to admit, I'm surprised with Apple's continual meteoric. I mean, at what point will they hit a wall? We've talked about this in the past. You've suggested in previous episodes that, with their car, that suddenly Apple's going to become another growth stock.
Yeah,
it is an astonishing story, and post Jobs Apple with Tim Cook is just astonishing. I mean, it's a remarkably run company. They don't drop the ball. They don't fuck up. Whereas Facebook seems to be completely fucking up on everything it does.
Ultimately Facebook isn't, because what it did this week is it stopped. It didn't grow. And it's interesting when you look at the stock market, it's a little bit like witchcraft. It's hard for most people to understand why things happen, but actually there is a rationale, and the very core of it is that people pay for growth. So Facebook not growing is a massive difference to anything that's ever happened.
Yeah, but their whole premise was that the whole business of Facebook was based on growth. So if you stop growing, it's inevitable. There's going to be a crisis. I mean, we were told, I remember when having 1 billion users was a huge deal. Now, how many people are on Facebook? Over 2, maybe 3 billion?
Over 2 billion. And if you and me were running Facebook and we were to face the question, how do we keep growing? we would know it isn't demographics and it isn't geography. Therefore, it must be
Is your dog
revenue.
on Facebook, Keith?
My,
Sounds like it.
my, let me go and close the door so at least we can hear each other.
That's Mark Zuckerberg, by the way, everyone. Barking in Palo Alto.
Exactly. So how would you grow Facebook? Well, it's all about revenue. It's interesting. I've been trying to sell something on Facebook Marketplace this week, and it's incredibly hard because they do such a poor job with it. So I think a lot of it's incompetence. I think when you have 2.7 billion people and you're not, and 98% of your revenue is coming from advertising, it really tells you that you are being incredibly lazy on thinking about anything else that might give you growth.
Well, but the funny thing is that Google's done very well this week, and you and I have tended to write Google off. Google is another one-track pony.
Yeah, well, Google's been trying to get away from pure advertising revenue for a decade at least.
Has it? I mean, I don't think that's reflected in Google's prosperity this week. It's simply that their numbers are pretty good compared to Facebook.
Their numbers are good, but the best number of all is the way less than 90% of the revenue is coming from advertising.
Where's the other 10%?
Android was a record. Android
Yeah.
phones were a record this quarter. But could Google through the Pixel, which is the Android phone that they make themselves, could they morph into an Apple-like revenue model? It's very hard for them, but maybe. And whereas Facebook could never do that. Facebook's only alternative canvas to the web is the metaverse, and that's a non-starter.
Well, we don't know yet. I mean, it's easy. They've been written off in the past. I think it's like with jobs. It's always too easy to write these people off. Zuckerberg I don't care for him, but I think he's a very smart fellow, and I think that the metaverse bet might still work out. Who knows?
I don't think so. They closed down their crypto platform.
Yeah, but that's got nothing to do with the metaverse.
No, it actually does, because a lot of the monetization in the metaverse is going to come from blockchain and crypto.
Yeah, but those two things are not mutually incompatible. I mean, you can have other currencies in the metaverse. It's just that was also compromised politically. I mean, Facebook's hit a wall politically. They're so unpopular. They've been used as the punch bag by everybody. And now you're beginning to see the real consequences.
But what is it really? If you really dig down underneath it, what is it? It's lack of nuance in strategy. Like they announced Libra, as it was called, as and then pre-announced that they'd only go forward with it if they could get consent from governments around the world, which kind of killed it right at the beginning. And it took them 2 or 3 years to realize that that was always going to happen, and now they've closed it down. So their blunder was actually lack of revolutionary zeal for Web3, and compromise built into the very core, which is probably driven by, what's his name, Nick, the Liberal Party guy who runs,
Nick Clegg.
Nick Clegg,
I have to say that Clegg's position in the company seems very odd. Why they would employ him. But again, I mean, the previous guy, what was his name? Elliot, wherever his name was. I mean, these are guys are thrown out there. They don't make any decisions. It's too easy. You blame the messenger. You shoot the messenger. What about Amazon, though? I mean, Amazon raised the price of Prime, and investors love that. So the response, what seems is that the investment community is intensely jittery in either a positive or a negative way. Any reason to any bad news means massive decline in stock value, and any good news results in massive growth. And neither seem particularly convincing.
Well, you're characterizing it accurately when you look at it from the point of view of investors. But if you look at it from the point of view of leadership, and you contrast Amazon's leadership decisions with Facebook's, Amazon Amazon was facing strikes by workers who wanted to unionize not that long ago. What they did is they increased wages. And in order to pay for the increased wages, and they were very explicit about this on the earnings call, they're raising Amazon Prime prices, which is amazing that they have that lever to pull. Because I don't know about you, I'm not going to cancel Amazon Prime for the price difference because it's a good deal.
Yeah, and it shows what a remarkable business it is. That I mean, maybe I don't think either you or I are particularly represented, but spending an extra $20 or $30 a year on Amazon Prime is a no-brainer. I mean, we're not going to cancel; it's
So that was
essential. We have to
so,
have it.
so in the middle of what could have been a crisis, they've steered their way through it
I
because
mean,
they
if
got.
they'd have raised the price to 250, you would have paid that. I would have paid that. Maybe we'd be unusual.
I think I'd save 250 in delivery fees.
Not
Just
that
by
we
not.
get anyone watching from Amazon. Not that we're giving you any ideas. Please don't raise it anymore. Certainly this year. What about your sons, Keith? We talk about them as examples of young investors. Is this enormous volatility in the market? Is it a reflection of new kinds of investors, or are these institutional investors determining these radical, sharp fluctuations?
It's institutional investors for sure. My sons can drive the market up; they'll never drive it down. They're not by instinct. They don't short stocks. They only buy long holds in things they believe in because they're young and optimistic. But the institutional investors are cynical and tactical, and so most of the decision to shrink the multiples that are paid for growth comes from the institutional investors. And by the way, they're also cynical because they can drive prices up or down with small percentages of the money they have under management and benefit from that with the rest of the money they have left afterwards. So the market is, to be honest, no individual can manipulate it, but collectively it's pretty much
And what do you make of the fluctuations in fintech? I mean, before the Facebook announcement and their sharp drop, the headlines were all about PayPal. How would you explain PayPal's radical drop this week?
well, the narrative was lack of growth, and the subtext was the lack of growth won't be compensated for by a move into crypto. So that was what the market analysts said. I think that is exactly what they believe, and
Do you
they're
think this
looking.
is all just correction post COVID? We're kind of edging into a post COVID world.
Yeah, well, it's two things.
PayPal went from 80 or 120 to about 300, and now they're back down to about 130, which is probably what they should have been in the first place.
I think there's two things going on. The first is that there's a macro level correction, and that's driven by the things we've talked about on the show before to do with multiples and the price you pay. And everyone's affected by that, everyone. And then there's individual reaction to specific circumstances at the company level. And those reactions are, as you said, extreme on the upside and the downside. It doesn't really make any sense that Snap went up 60% in a single day.
Well, that's obscene. That makes me very uncomfortable because no company should be going up or down 60%. It's
Yeah.
absurd.
But Snap
And
was.
what extent, when I was looking at the PayPal stuff, it occurred to me that um, PayPal was always just beneath the radar. It wasn't one of the big five or six, but when it was at 300, its value. It was worth about 300 or 400 billion dollars. Does that mean that sector, that sort of B plus big company, they can't exist? That either you have to be an Apple, a Google, or there's an enormous gulf, that there is no middle class, middle market tech company, that they get squeezed?
I don't think it's only about size. I also think it's about where you are in the market. Like last night, my wife is South African, and we go to South Africa every now and then, and we're going to go
You
this
didn't go
coming.
last night, did you?
No, but we are going to go this coming Christmas. And so
Yeah.
last night, I was booking flights for 6 people to Cape Town from San Francisco and back again.
Keith, it's February the 4th. Why are you booking flights already?
It's a lot cheaper if you book ahead of time. Anyway, let me tell you that I wanted to pay using my Apple Card. Why? Because it's built into my phone. It would have been easy.
Yeah.
And Apple hadn't yet done everything. It got rejected because Apple didn't know um, the Qatar Airways. So in the end, I went to the Qatar Airways site, and the only way that I could pay easily was PayPal. But I couldn't easily do it from my phone, from their mobile app, but I could do it on the web. So what the real problem is that PayPal doesn't really own the mobile experience. It's just an app. Apple
Yeah.
does own it. So eventually you've got to believe that Apple's in prime position for Apple Card and Apple Pay to be your primary way of paying for everything. And if you're not Apple or Google, for that matter, Google Pay, you've got a tough time. So that means that the next level is the developer-facing payment companies like Stripe, which PayPal does have that as well. But even though they started much earlier than Stripe, their APIs are not as easy to implement or as seamless as Stripe's. So PayPal's got some tactical issues, but it's still got a massive upside if it knows how to, if it
Mm.
can be more like Amazon than like Facebook, which is at the management level, navigate its opportunity. I think it's still got a huge upside.
Would you buy PayPal at 130?
I'd want to interview the management first, and then I would decide.
Maybe you should talk to my wife. Um,
She'd interview me. I know her well enough to know that.
what about Africa, Keith? We've segued. You're going to Africa next Christmas, but we go to Africa every week on this show, and you have an interesting article about tech growth in Africa in this week's newsletter. What's happening in Africa this week?
Yeah, I cover Africa quite a bit, and to such an extent that I'm now noticing things that happen there. And none of this is yet earth-shattering, but this is the future being built in front of our eyes. So this is a Kenyan uh, tech fund that's going to invest across Africa, raising 8 billion Kenyan shillings, which is $70 million, which is not a lot for a fund, but it is in Kenya.
Well, it's a lot of money in Kenya.
And then the second story is Tiger and Greycroft. Alan Patrikov's fund, Greycroft, Alan Patrikov is a well-known venture capitalist, doing a $15 million round in a Nigerian app that makes it easy for people to invest in things in Africa. So, it's just more evidence that Africa is turning into a first-class investment platform for venture
Well, it wouldn't
capitalists.
be that was the week if we didn't have a Web3 conversation. What's been happening with Web3 this week, Keith?
Um, I'd say 2/3 of the newsletter is actually about Web3 this week. I didn't make it the headline because Beezer Clarkson did such a good job of profiling venture capital, and we haven't talked about it, but the first two articles in the newsletter are based on her writing, and it's really, really something you should read if you're either a startup or a VC.
Well, we'll come to that a bit later because I am interested in the impact of this market turbulence on venture capital. But what's happening on the
So,
Web3 front?
so Web3, there was a lot of stuff. I know you interviewed Albert Wenger this week. I'd love to hear what he had to
Yeah,
say.
Albert was on my Keen On show, and I also had an interesting conversation with Sebastian Malaby, who's written a book about venture capital, which I think, Keith, you won't agree with everything he says, but I think it's an interesting interview.
Right. Web3, lots of things. The first is the inevitability of trusted third parties is another way of saying you can't really fully decentralize. So this is questioning the idea that you can trust networks without people.
Well, but isn't that the whole point of people like Don Tapscott, that the blockchain is, like it or not, it's true and you can't tamper with it? So that's just what truth will be, and that is a truly trusted third party because you can't corrupt it.
Yeah, but this article is questioning that. It's Cory Doctorow, by the way, is well known, I'm sure, to many of our
Yes. I know Corey.
listeners. But he talks about the need for auditors to avoid Ponzi schemes, and it's basically a pessimistic, somewhat cynical view of Web3. And I led
But
with
isn't that but just correct me if I'm wrong. The whole point of the blockchain is it can't be a Ponzi scheme. Maybe investing in it might be, but you can't tamper with the data.
You
Isn't that
can't
the whole
tamper with,
point of it? Otherwise, it's not blockchain. Then it's just something else. It's just more data which is
yeah,
corruptible.
that's true. But you can build systems uh, that are trustless, that nonetheless rely on, um, if you like, layers of economics, a little bit like these selling schemes, that happen. So you could use the blockchain and Web3 for Ponzi scheme like plans, just as you could use a bank for that.
Mm.
So there's nothing innate about the blockchain that would prevent a Ponzi scheme adopting it as their technology platform. They could. Um,
Not, of course, the Keith that you or I have any experience or familiarity with Ponzi schemes.
exactly. The other big news in Web3 was that a company called FTX raised $400 million.
Yeah, I saw that. Who is that guy?
I
Sam
don't.
Bankman-Fried.
Uh, let's click on it and go and take a look. Deutsche Bank were involved in this deal. Deutsche Börse. That is Sam Bankman-Fried, who's the CEO of FTX. And FTX is basically an exchange platform. Um,
So it's
uh,
like Coinbase.
it's like Coinbase or Binance, but it's a big one. It's one of the big ones. And it's yet more evidence that in the midst of public market turmoil, VCs are continuing to bet on what will be relevant 10 years from now or 5 years from now.
But that's not debatable. But the some of the articles that you linked to in the taking the venture temperature of the section, the lead section of this week's newsletter, suggest that there is going to be a change. The funds will start to dry up. There's going to be less money, more pessimism, more nervousness, right?
Bryce Roberts argues that.
But isn't that inevitable? I mean, at least for the next
Well,
few months.
the counter argument says that it actually isn't happening. That there's a great Wall Street Journal article I point to that talks about there being 900 billion dollars on the sidelines. Here it is. The sun is shining in my eyes, so I can barely see what I'm doing. 900 billion cash pile inflating startup valuations. And so there are large amounts of capital on the sidelines, and the way venture works is limited partners who sit on this money pledge it to venture funds. This is just the amount that's already been pledged. It's not amounts waiting to be pledged. So it's very unlikely the private markets are going to be impacted that much, especially in the early stage, by what's going on in the public markets. Bryce Roberts begs to disagree, and he says he wouldn't like to be the guy raising money. Where is it? I think I probably have to click on the link to see it. But he basically says he wouldn't like to be having to raise money in 2022 from LPs. And Elizabeth Clarkson, who's at Sapphire Ventures, she's wonderful, by the way, in terms of both having a finger on the pulse. She invests in funds, but she also invests in companies, and she's in the middle of everything. So she kind of has a very good bird's eye view of the whole thing. And I strongly suggest reading this thread, which kind of goes through what everybody's thinking and why, is really, really good.
Well, we've come to the really, really good bit of our show, which is Startup of the Week. Interesting startup this week, Keith.
Yeah, our startup of the week this week is Phantom, which raised $109 million in new funding for an iOS app, which is basically a wallet sitting on top of a coin called Solana. And Solana is a blockchain that claims to be able to fix all of the problems with Ethereum, problems like it being slow and being expensive. So the Solana coin right now, if we take a look, let's just go and look on Coinbase and look at what the price of Solana is. Prices on Coinbase, Solana. Here it is. Solana is $112 today. If we zoom out a year, so we can see what the trend was, it's down. The peak was $258, $260. So it's down about 70% from its peak. Yet venture capitalists are betting that Phantom, which is a wallet sitting on top of it, is worth giving 109 million to, because they think Solana represents a big part of the future of blockchain.
Well, they have a good name, but I have a feeling that in 5 years we were looking back at all these companies and thinking of them as pets.com and the other insanities of the 90s. And finally, tweet of
You're
the week.
so
And
optimistic, Andrew.
I'm the most cheerful person nowhere. And what about tweet of the week?
Well,
No
tweet of
Paul
the week.
Graham this week. Where's Paul Graham?
We replaced him with Keith Tier. So
Well, you'll have to watch my interview with Sebastian Malaby, because I even bring up Paul Graham in that, and I mention you. So anyone watching, go to Keen On and watch my interview with Sebastian Malaby, who really probably knows more about the venture capital industry. Probably he knows too much, and he's just got this really interesting new book out on it.
yeah, actually, it was a good interview. I watched it.
So good, you didn't include it in the newsletter.
That is true, Andrew. That is true. I was so preoccupied with patting myself on the back that I forgot to do it to you. And this tweet of the week is a little bit patting myself on the back.
Yeah.
I was chairman of the board of Millicast until 2 days ago, when it was acquired by Dolby.
Congratulations. That is, you used to tell me about Millicast.
And so Millicast is now part of Dolby. The team is part of Dolby. There's a story here. The founder of Millicast, Dr. Alex Guyard, was killed in a car crash in April in Thailand.
I think you mentioned, we talked about that actually on the show, I think.
Yeah, and that left his company and his colleagues not only distraught about the fact that he was killed, but wondering what to do with their business. At that point, I stepped in as chairman, and we've spent the last 9 months recovering from that incident, solidifying the company, eventually selling it to Dolby. So
congratulations. Can you sell That Was the Week to Dolby?
Not really up their street. We'd probably more likely sell it to the New York Times, Andrew.
I don't want to talk about the New York Times.
Who bought Wordle this week.
I know. It's such a boring story, isn't it? Who cares?
I mean,
New York Times might do news very well, but they don't do tech. Any investment by the New York Times is by definition going to be a catastrophe.
Well, they do the crosswords, and I actually thought it was very smart of them to acquire Wordle, between you and me, just for the audience. Yeah. I doubt they paid much for it.
How much did they pay for it?
It was apparently 7 figures, so that means 9,999,999 or less.
So it could have been $50.
No, that wouldn't be 7 figures.
Oh yeah, so $1 million, between $1 million and 10.
Yeah, which isn't bad for a new startup that does a word game.
Have you sold Signal Rank yet?
I was thinking we should do a numbers game. Why don't we do instead of Wordle, we should do Numble.
Nerdle. Yeah. Well, isn't that what Signal Rank is? A numbers game?
Well, it's not a Ponzi scheme, that's for sure.
Well, I hope you're going to get more than 7 figures, Keith. I'm expecting 10 or 11 figures for Signal Rank.
Exactly. Well, we already raised money at way more than 7 figures. We raised money at decent 8 figures.
Are you the only unicorn on That Was the Week? You're the only person on That Was the Week that owns a unicorn.
I've actually, in my life, had a few unicorns, yeah. And one of them is current, but there's a few in the past as well.
Well, that was the week for February the 4th, 2022. Radical market turbulence. Keith doesn't seem to be too bothered, but it's very interesting. Some companies going up, some going down. Silicon Valley snakes and ladders. I'm sure there'll be much to report on next week. We'll see you all in a week. Have a good week, everyone. And we'll talk, Keith, on February the 11th. No
We
doubt.
definitely
Many
will.
more tech stories. Who knows what will happen, but something will certainly have happened. Talk to you then, Keith.
Bye bye.